Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it's been a very erratic 24 hours. The market's swinging to and fro in the bullish and bearish bias of the market's movements over the recent statements that have been out there from Australia and also out of America. Starting with the Australian dollar, over the last 24 hours, the choppy session has been relatively keeping the bulls and bears busy. Since the market rejected from that 60-day moving average, as you can see here, that comes in at 78.1530. Early in this session of yesterday, the market plummeted on the back of the release of the private new capital expenditure, which does reflect a low number for the economy. The release came out and slid lower to 0.2% in quarter-on-quarter for the Q4 2017 and was worse than the economists' consensus of around 0.9. Nevertheless, the Australian dollar fell to a low of 77.11 before profit taking came in, and at the moment it's currently trading roughly around 77.70. Overall, I do expect to see any advances to fail towards the top side, with the resistance coming in now. That's with the resistance now coming in at 78.0520. Overall, from a technical point, I do expect to see further weakness, with the support on the day holding at 77.40 and down towards 76.85. Now, while we remain underneath this 60-day moving average, and if you just look back over the last few months, is that when it broke recently in May 2017, it confirmed the bull case all the way up to 81 cents. And then when it broke beneath 79 cents, it fell all the way down towards 75 cents. And now it's breaking above, not so long ago, above 76.80. We got back towards 81 cents. If we maintain underneath 78.0520, which is where the moving average is currently placed, then we should see a decline towards 75 cents as an objective for the Australian dollar in the next coming weeks to month. The euro played a very mixed price action as it balances on the double top reversal neckline. It came in around 121.80 to 122 the figure, and at the moment was and appears to have been rejected, posting a bullish outside range day. Of course, like with the previous reversal outside range day to the bear case, we needed confirmation. We also need confirmation this time to the bull case. While we don't have it, then I still look towards the downside test of 121.80 to 122 the figure. A break beneath and a close tomorrow morning New York will give further confirmation to the down case and look towards a target of 118, which is where the measured neckline comes in. As you can see, resistance on the day is seen at 122.75.90. For some of you who have been wondering why dollar yen has been so weak, it's mainly if you look at some of the crosses like Aussie Euro, Aussie Yen, Euro Yen, Sterling Yen. Those crosses have been relatively strong to the yen case. So this is why the market has been pretty much negative over the last few days to dollar yen. My strategy has been buying dips, and while we remain above 105.55, then I'm bullish. And I expect to see a challenge towards this topside resistant line in the short term, which comes in around 107.0515. A break above there gives further scope to a 107.70. If we break beneath 105.55, then I'm neutral in the short term and time to reassess the outlook. It's interesting that the pound rejects that level of 137.25, but not out of the danger zone. I still think there's further threat to the downside, especially with the up-and-coming recent news from Brexit, which was the main topic yesterday, in the latest reports that UK Foreign Secretary Boris Johnson said that the UK would not remain subject to the ECJ, also known as the European Court of Justice. In related news, Brussels is expected to demand the UK to stay under the ECJ oversight indefinitely post-Brexit under the new divorce agreement. But while these stories continue to conflict against the pound, should put a bit of a bearish case on it. So 137 beneath there gives us 135. For those trading the gold, well, if you were looking to buy around 1,300, you may have got that last night. The market took a stab towards there and got a low of 04 before rejecting. Silver got to a low of $16.15 also. So from the rejections, could see a slight up test, but we're not out of the danger zone. And from the technical point, we could see another test to the downside. But I believe towards 1,300 is still a buy zone. And let's see how the market plays out in the next 24 hours. If we get another rebound, we could be looking back towards 13.20 to 13.32. As I mentioned, silver rebounds from $16.15 around that 20 support. Now looks towards the upside, but unlikely to last too much more than a couple of hours today. Resistance is a long way away. It's around $16.70. We could get one more test to the downside while these technicals are still a bit flat. Towards $16.1520, which should still hold. And rounding off with oil, it's still bearish, even though we did get a stab towards $60 last night. Overall, I'm looking at $59.25, and any advances should fail towards the region of 62.5. Look to take profit towards 59.25 if you are short. Well, that wraps up for today. Thank you very much for joining me for this webinar. I hope you have a wonderful day and an excellent start to the new weekend.